Assalamu alaikum everyone, and welcome back to the another video of the Alpha Trader. In this video we will talk about price action. So if you are tired of using too many indicators and want to learn how professional traders read the market directly from the charts, then this video is obviously for you guys. Today we are talking about price action, one of the most popular and one of the most overhyped concept that no one talks about. So, by the end of this video, you will understand what price action is, why it works, and how you can use it in your own trading. Let's get started. Now, coming to the next part. So, the first question, if you are a beginner, what is price action? So, if you don't know anything about price action, let me just simplify it for you guys. Price action is basically the movement of price on charts. Instead of relying on indicators, price action traders focus on what price is actually doing. Remember, every candle tells us a story. A bearish candle tells us buyers are in control, and the bearish candle tells us sellers are in control. Basically, price action helps us to understand the battle between buyers and sellers. The most important thing that I want to tell you is that indicators are based on price action, and price action is the price. So, if you understand what I am trying to tell you, then obviously you are ahead of 99%. The next section we are about to go through is market structure. The first thing every price action trader should learn is market structure. Market moves in three conditions: uptrend, downtrend, sideways market. We'll get into that step by step. So, the first condition we are going to talk about is uptrend. What is uptrend? When market is making structure like low, high, higher low, higher low, higher high, it tells us that the market is in an uptrend. Let me just simplify it for you. When market is creating new higher highs and higher lows, this is previous higher high and this is new higher high. When market is breaking that previous higher high and making a new higher high, it tells us that the market is in an uptrend. This is how you can identify an uptrend. The second condition we are going to talk about is downtrend. What is downtrend? When market is making structure like lower lows, lower highs, it tells us that the market is in an downtrend. Let me just simplify it for you. When market is breaking their old lower low and making a fresh lower low, it tells us that the market is in a downtrend. Downtrend shows that the sellers are in control, and uptrend shows that the buyers are in control. This is how you can identify that two types of trends. The third part we are going to talk about is completely different. The third condition we are going to talk about is sideways market. The condition in which price isn't breaking its previous higher high and higher low and continue moving in a range. Neither buyers nor seller have any control. The market is moving in a range and stuck between two ranges. Before taking any trade, always identify the trend. Don't go against the trend because remember, trend is your friend. The next section of the video we are going to talk about is support and resistance. So, support and resistance are the level where price react repeatedly. Let's talk about support, a level where price steps in and push price upward. What does I mean by that? Let's have some example. You can see here price comes in a zone or in a spot level and bounces back from there. So the resistance, let's talk about the resistance are the level where sellers steps in and push price downward, or where from the zone from where price continues going downward. Support and resistance are the areas which helps trader to find potential entries and exit. The more time a level is respected by a price, the more stronger it's become. Never mark a support and resistance as a line, mark them as a zone, because it is the simplest way to trade and it is also easiest way to trade. If you are a beginner, you can be profitable by using support and resistance because it's that simple. You can draw the zone, wait for markets to comes in, then you can enter with a stop loss above that resistance or support, and simple the target of 1:2. Now let's talk about candlestick confirmation. The first candlestick pattern we are going to talk about is bullish engulfing. What does bullish engulfing tells us? It's a sign that buyers are entering in the market. Let me just show you an example of bullish engulfing. Here I marked out a bullish engulfing pattern. You can see a high volume bullish candle engulf a bearish candle, and then later you can see the whole trend change. Now let's talk about bearish engulfing. It's a sign that sellers are going to control the market. Here I marked out the bearish engulfing pattern. Here a high volume bearish candle engulfs a bullish candle. Then later you can see the whole trend change. Now let's talk about pin bar candle. Pin bar candle shows rejection from an area. A long wick mean price attempted to move in one direction but got rejected. When candlesticks appears at key support and resistance, it become more powerful. Let's put everything together. Identify the trend. As I told you earlier in this video, how to identify the trend. Lower low, lower high, lower low, lower high, lower low, lower high. Step 2. Mark out support and resistance. Here I marked out my resistance. Let's reach market to our zone. When market re- when market reaches to our zone, we will wait for a candlestick pattern. Here you can see a bullish engulfing pattern. A bullish engulfing pattern is formed. So our requirement is fulfilled. Now we'll enter the trade. Now step 5 is to enter the trade. From here I'll enter the trade. Step 6 is to place your stop loss below that support or resistance. Here I placed my stop loss below my support level and aim for 1:2 or target the major level. Remember, patience is a skill in trading. Don't chase the market, let the market comes to you. Now, let's talk about common mistakes most beginner make. Number 1, entering without market structure, ignoring support and resistance, entering without confirmation, risking too much on one trade, and overtrading. Avoid these mistakes and your trading will improve significantly. Price action trading isn't about predicting the market. It's about reacting to what market is showing you. Mastering market structure, mastering support and resistance, mastering candlestick confirmation, and most importantly, stay consistent. If you find this video helpful, make sure to like, subscribe, and share it with someone who wants to learn trading. I'll see you in the next one. Take care. Allah Hafiz.